Hello, today is Thursday, the 13th of September 2012. This will be a silver video. If you're looking for gold, crude oil, or anything you may want to see, I'll get that on the weekend because gold's having a nice day as well. Crude oil, volatile, I'll just say that. Same with the dollar index. It's anything you want to take a look at for the weekend or want me to take a look at, please let me know. And so let's get started with today's daily chart. And before that, big gains today. 137 as of 2:15 p.m. Eastern is the gain, or 4.11%. And well, there was a 57 split-second gain and movements that went way up so fast. And if you want to see that, I did a video called the 57 split-second gain for silver. It's the last video. And now let's get started within this. This trend line, which is really large, I was talking before that this is a very low rate of ascent. And this is a very high rate of ascent, of course, and it's still holding. And what's interesting to note is that when you have a high rate of ascent like this, and things just keep going higher and higher, that if you break this trend line to the upside, it would be an upset to occur, but still, if it does occur, then you want to watch out for massive volatility. We'll go over massive volatility within the end of this video. As far as Fibonacci retracement levels are concerned, to me right now, there could be a pullback, but of course, if this thing goes higher, I'd now be expecting for this bar to really be somewhere in here now. If, of course, it continues to go higher, and there's a good chance that it actually may do such a thing. As we'll move on to the two-day chart now. And the two-day chart will pretty much show a little bit from the end of last year, of course, into now. The dates on the bottom of the screen, just ignore those for now unless you need to know the dates. It should be fairly easy to go through. As far as the chart analysis is concerned, however, I've been viewing this level of the 37.5 top and really this 26 low. It was set in even before here for quite some time. So on the way back up, no resistance found in here. None. Not even support for that matter, although close in here. And then you come to this level, and I say the three things. What are you going to do? You're going to find resistance there? Okay, and if you don't do that, are you going to pierce above it and thus still find resistance? Or are you going to have a fast move to the next level? The next level, of course, is the previous high when you break through this one. Or are you going to find support and lift higher? Well, we kind of found support there in today. And thus, it has lifted higher, so it's looking more and more as if the movement will now bring us up to that 3750 high. So what that means on the Fibonacci analysis level is that you are now looking for setups on the long side with your exit point being 37 and a half. Now let's move this on to the weekly chart. And the weekly chart contains the fib level from the big high in 2011 and, of course, the low hit multiple times this year as well as last, which is a little over 26. All right, then. So this is test number 3 of this level, and it's looking more and more as if it wants to break this higher. Now, I don't think you really need to hold this level as support, whereas if there happen to be further movements bringing it down below 32 and the 31s, I think that would still be fine. You got the rising 18 average, which would be the must hold area I would consider for support on any further pullbacks. But this thing does have the potential to have that fast move up to the next level, which is 38.92. Now, what trumps what? Does this level trump this? I'd say that's hard to say, but overall, I give the Fibonacci the case over a previous high. But again, something to look out for, because if you're not going to find resistance here and go do something like whatever, then it's got bullish signs. Finally, the monthly chart, I'm going to look at the Fibonacci from the 1774 breakout. It's just playing out well. And if this thing can go up, maybe find some support and lift off, then that's confirmation that the bull market is looking really, really good. On with today's volatility, when we look at today's movements, we have a high of 34.82 thus far. It could break, it may not. It's 2:30 as I'm doing this. A low of 32.68, and a movement of from lowest point to highest point, which is high minus low divided by low, of 6.55%, the highest since, well, the top. And look at when these key things occur. This one, which was an up move, well, ended up being such anyway. This was the bottom. This was the top. Now on January the 20th, it was coming from its bottom, which occurred in here. So very oftentimes you get these massive volatile moves as things are topping, bottoming, or ready for a break higher. Does it look like it's on the top level? Because usually if it is, well, then you get stuff where, well, you get the sell-offs basically. As you can see here, high 37.50, close 30.46 basically. Okay, since 2000. These are the amount of large moves that have occurred. We'll start with the bottom. 2012. 12 5% moves, but less than 10. And only one 10% move, whereas of 2011 there was 57 and 10, and 2008 84 and 17. 17, yeah. So to me, this year has definitely portrayed to be that of the calm before the storm. And when I look at this, this really indicates to me that this has been nothing more than a correction within the uptrend, which was really no surprise at all. And these levels here were the second largest volatile moves we've had, going back to, well, 1979, 1980, and even 1981, which is most likely the type of levels that will come back again very soon as the calm before the storm comes to a completion. Thank you for tuning in.